In this video, I'm revealing my scalping strategy that I make an average of 5% in a good day based on ICT concepts. This won't be like the usual random scalping methods that you will see on other YouTube videos. I'll show you live trades that I took live in the Discord. If anyone needs one-on-one mentorship, check out the description and let's get into the video. Now, looking at the chart, the problem and the issue that you're having is scalping randomly. So you are focusing more on quantity other than quality. In this video, I'm showing you my real scalping strategy that I take live in the Discord every day, and people always ask me, oh Mulham, why did you take this one? What is the confluence? So today I said, okay, I'm going to be revealing this. And one of the other issues that you're already having is not being satisfied with the basics. And you're looking for something that is fancy and that is new and complicated also. You're not really focused on the main concepts. As I always say, liquidity and fair value gaps. This is how I scalp based on liquidity and fair value gaps. So we're going to be focusing on quality more than quantity. And by following this, what we're going to do is actually going, even in scalping, we're not going to be focusing on one time frame. Scalping means entering on lower time frame to make profits very fast in the same, like let's say in the same hour or 2 hours, but making a lot of profits. But it's not about quantity. It's not taking 10 random trades in 1 minute, for example, right? So what we're going to do is do top-down analysis. So I've talked about top-down analysis, but the best way to explain this method is by going over the examples, few examples that I took live, show you what I was thinking of at that moment. So I will go over what I was seeing at this time, what I was thinking, and what was my feeling at that time. So starting with the first example, and this is Australian dollar. Most of my trades are on Euro USD, and you'll notice that. But for this day, the setup was so good. It was so good, I could not avoid it, and I took it on this day. And why? Because there was no Euro USD setup on this day. So I was not seeing anything on the Euro USD. I said, okay, I'll be trading the Australian dollar. What are we seeing here? Now, what we're going to do is go from the higher time frame, and for me, it's the weekly and daily. And then I'm going to go to 15 minutes and finally to 1 minute. Now you can find the time frame alignments that fit you. The weekly and the daily are not going to be that mandatory. It's not going to be every time I need to look at them. But if it's aligned with the medium time frame, which is the 15 minutes in this case, that's even better. But in this case, and in this example especially, I'll be only going over the 15 minute and the 1 minute. If we see here, simply price looks like it's going up, right? So the order flow is going up clearly. Price has been going up for some time, and now price is retracing. There was a liquidity sweep right here, you see, or even lower. So this one and this one, this level of liquidity, the sweep happened, and then immediately a displacement that we did not have a similar one before. So this was not the same displacement as this one. There was no displacement like this in the previous days. And so we had the sweep and then a breakout structure right here, or change of character, leaving a fair value gap. What we see is price filled this fair value gap right here, also right here, and right here. The question, why was this fair value gap not really respected in a way that we see a displacement after? There's only one answer to this. And also similarly, what do we have here? Again, price coming back into the fair value gap, not displacing. And why? Because this fair value gap was filled not in the right time. This is 1 p.m. and this is about 3 p.m. Those times are not in kill zone. This one was on the Asian session, so price was not actually ready to go up. So what I said at this moment, okay, I want to be scalping. I want to be looking at those lows as a liquidity level. So we already have the change of character. This is all confluences. I was really focused on the fair value gap that has a liquidity above, or liquidity actually inside in this case. So I was putting my fair value gap like this and waiting for this level to be taken. So this was the lowest level. We have more liquidity here and more liquidity here. So basically low resistance liquidity, and we have a fair value gap below them. Also the Asian session low has a fair value gap below. So that's another confluence. Basically 15 minutes, we're going up. We have a bullish fair value gap to push price higher. Today's video is sponsored by Hanko Trade, one of the best brokers in the business, with spread as low as 0, low commission, and you can trade all markets, including forex, indices, and crypto.
And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video.
Now, all if I'm waiting for is price to sweep the liquidity level in a kill zone, so either London kill zone or New York, and then either. And this is very discretionary. This is my way of doing it. You can create a mechanical way if you prefer. What I prefer is a discretionary way. What I do is either wait for price coming into the range, change the state of delivery, or fair value gap. The first one I would take, sometime I would take the second one. It depends on the logic behind the trade. And that's what I'm trying to tell you here. I want you to use logic in every trade. Think in a logical way. Does it make sense for price to go higher now? And to where to set your take profit? And then where does it go to invalidate this trade? And that's going to be your stop loss. So really use the logic behind every trade. And that's what I'm going to be using here. Even for the entry criteria, what I see is making sense. Following my trading plan, I would take it. For now, this is the context behind the trade. The execution part is going to be a little bit different. So we're waiting for price to kind of sweep. So it's 145 here. I would go to the 1 minute. That's my time frame to scalp. Now you will see what I mean by scalping. Scalping is entering and then exiting in the same hour, in 2 hours, but pretty fast. It's not about taking a lot of trades randomly. Long here, sell here, long here. That's not really the real way to scalp. So we see price coming lower, playing the price action here. This is the start of the London kill zone at 2 a.m. This yellow zone. And we can see price is coming lower still. No sweep of those levels, the Asian low and then the other lows and the fair value gap. What do we see happen here? And I'll show you the execution right here. Okay. I'll show you where did I execute, when did I send it in the Discord. And we can see now that price actually went lower. Here is the thing. That's the logic that I really wanted to use behind every trade. What do you see here? What is this telling you? We have the 15-minute level of liquidity. We have the 15-minute fair value gap. What is this? On the 1 minute time frame, price on the 1 minute could not even close below the 15-minute fair value gap. That tells me a lot of things. It tells me that price is now willing to go lower. Immediately when price took that level of liquidity, did not even close below, even with a tick. So that's the first sign of reversal. Now I'm going to play price action, and we can see that immediately price started to go back into the range. I see no change in the state of delivery right here. And right here, this is my change in the state of delivery. So this is what I've done. I saw this candle. This candle engulfed the previous 2 candles, and it's starting to go up. This is the birth of a new order block right here, new order block, or this one. So what we're going to do here is basically enter from here and then stop low below the low. So could give it some room for price to breathe. And then target what? So in this case, what we can target is this high. So this high is giving us 421. And if we go to 15 minutes, look at the price action. What do we have? Simply the Asian session high and the high next to the Asian session. So those 2 highs, usually I aim for the Asian session. If my trade is the power of 3 with the Asian session and the kill zones. Now this is my trade. Simply that's my trade. And I'll show you the execution. And I showed you the execution, everything. This is how I traded this live on the Discord. And let's see what happened now. Now if you go to the 1 minute, you can simply see what's going to happen. Price a little bit retracing here, another engulfing candle going up. And if I play it fast, you can simply see that price went back into the entry and now starting to go up. And simply going up to where? Immediately to the Asian session. And there you go. That's, you go to 15-minute back, that's 9 to 1. So let's say you risk 0.5% in this trade, you're almost making about 5% using this. So only taking this setup, if you take this one, that's 5% in a day. Let's say you get 2 losing trades, that's 4%. That's already huge. That's already huge. And if you see here, what do we have? When we entered, and that's where you get that feeling that, oh, this trade is really working on your side. What do we have here? First candle, bullish. Bearish candle just coming back and then rejection. And see this. 1, 2, 3, 4, 5, 6, 7. 7 candles, all bullish, going into your direction, into your drawing liquidity. This one. and also this high. And you see this high was taken. So you could extend this to this high. That's going to be 11 to 1. That's already huge. That's already huge. And if we see what's going to happen after, is price a little bit retracing, coming into this fair value gap and then going up. So we basically had the New York continuation here. Coming lower, New York coming into a fair value gap on London, then going up. So that was a very huge trade. This one I take almost all my profits at the Asian high. That's one of the trades. In this one, we did not really use the extreme high time frame, which is the weekly and daily, but we use the medium time frame, which is 15 minutes back to the 1 minute, because it really did not make any sense not to enter this trade. 1 minute time frame is really respecting the 15 minutes levels, and then immediate rejection, no reason not to enter. This is another trade that I also took in the Discord, and I send it before it happens. If you can see on the screen. So basically, I took this trade, and why did I take this one? First of all, this example would not be on the 3 time frames, only 2 time frames. The next one, I'll go over 3 time frames that we can, use together. So basically, Asian session right here, it was not really consolidating, so not really much. Price was going lower, the low was taken, and then price went above the high. So there was this high in a fair value gap where price did not really kind of respect it, but it went lower. Now, did anything else happen here? What do we see? And that's what I saw, is sweeping of this high on this high. And where did the sweep happen? So sweeping highs inside of what? We have a fair value gap here. So that's the one that was really valid for me, because all of those price did sweep this, but it went a lot into the order block. So there was not immediate rejection from there. But what I see from this example is price really sweeping the level into the fair value gap. And now I would be expecting price to go lower to where we're going to see. So what we see on the 1 minute is price literally sweeping here, reaction from the fair value gap, and price did not even close inside of the fair value gap, not even inside. So price really respecting the 15-minute fair value gap here. Again here, just a small wick inside, then coming back into the range. So in this candle, we don't really see that all price engulfed the previous candle. So it was not really a very strong rejection from there. But after this candle, this is the big rejection here. So big rejection. What you could do here is simply enter from here when this candle close, stop loss above the high, and then target what? I mean, in this case, easily you can see that there is a low resistance liquidity here from this high to this high to this high and all the way right here. So a lot of low resistance liquidity that really need to be taken, and we can target those. As simple as this. This is a 2.6, but in my case, when I have this big engulfing candle and it's taken a lot of the take profit, like the reward to risk is not really worth it at this time, I go to the 15 minutes, first of all, and I can see that, oh, price could go even lower to this fair value gap on the 15 minutes. That's the first thing. On the 1 minute, this engulfing candle is very big. When I see something like this, I don't enter on. There are 2 options. First, entering on the retracement of this big candle. So if price kind of retraces to the 50% of the candle, I would enter, or entering on the 50% of the fair value gap that price really created here. So first fair value gap, after sweeping liquidity and reacting from the fair value gap, that's going to be the second fair value gap, right? Entering from here, and we can see that price, before taking any level of liquidity, this one, this one, this one, and this one, it went back into the level of liquidity. And this one is a 4.4 to 1. And we can see now, if we play the price action, price simply going lower, taking all those liquidity levels and going lower. So you could have gone for more take profits. We have this big fair value gap right here. So you could have gone for more and more take profits. For me, I was really confident with this one, so I stick with this one, but it could go lower and lower. This trade, I sent it on the Discord. There was only one thing that I was not really confident about this trade. And what is it? Is that it was coming at the end of the London kill zone. So 455, and price got me in at 5. So 5 a.m., the end of the London kill zone, and I was not really confident only about this part. Otherwise, this is a perfect trade. It really follows everything that I explained. So medium time frame, high probability level of liquidity or point of interest, big rejection, only 1 minute. I want to see a change in the state of delivery or fair value gap, and I enter from there. That's basically my scalping strategy. Now for the last trade, we're going to be looking at the daily, weekly, and then 50-minute and 1 minute. So all time frames aligning with each other. We're going to be doing a top-down analysis. So basically, we can see that price was going up. After this liquidity sweep, price was going up. Where could we anticipate a reversal after price reaching some point of interest? What are some of the point of interest that we can anticipate a reversal from? We have this weekly pullback and we have this fair value gap, right? Those are the two levels on the weekly time frame that we can anticipate a reversal. If you are not familiar with this, make sure to watch my daily bias where I went over this example specifically and explain how to identify and find your daily bias. So weekly time frame done. We go to daily and let's see, do we have anything more in here? So this level of a fair value gap here, we also have another fair value gap above. And then we have a fair value gap on the daily time frame that is slightly above the weekly level, right? And we have an order block here. So price could go a little bit up. Now going to the 15-minute time frame, we can simply see that, okay, this is my daily fair value gap. It was right here and price a little bit went up. Now I'm expecting price to go lower because there are some other fair value gaps on the 4-hour that are above the daily fair value gap. And we are still in a daily bearish order block. So price could go lower. And I was waiting for any reversal from this point. So the agent session started here, and anyone who's looking for setups without logic is going to be failing here. And why? Because we had a low here, another low, and we have the agent session. So what a lot of people, and I know some of the people in the Discord, were looking for this type of setup. Price coming here and then going up. But we are already in a bearish order block. So what I was looking for any reversal. So if price could come here, sweep this level, in the 15-minute, I'll go to the 1 minute and I'll look for a reversal from here. What I saw here is this. Price went lower and people who waited for the sweep entered here are losing and simply at the start of the lending kill zone. So here's the start of the lending kill zone. What do we see? Literally a fair value gap. And as I said, every fair value gap tells you a story. So this fair value gap is telling me a story, telling me that there is something that is happening here. Now, 15-minute fair value gap aligning with the daily and weekly time frames. So now any reversal on the 1 minute inside of this, I would go lower. So now switching to the 1 minute, let's wait for price to come inside the fair value gap. Price going lower, coming back inside the fair value gap. So there is no reversal here. I mean, there is kind of a change in the state of delivery, but this one is not really a valid candle right here. It has a big wick and then price coming lower. It did not break the low of this wick. So not really a valid entry here. Price went up more. So the first entry that you could have taken here is this one. This change in the state of delivery. Why? Because this is the birth of an order block. So my order block would be right here and you can enter right here or at the order block. But for our entry, it's gonna be this stop loss just above the high and targeting this low. And this low was actually on the 15-minute, it should be broken and you could have targeted much more profits. Why? Because you're just starting the trend. So you could have gone lower and lower. So taking those low resistance liquidity here. It could have been a very big trade and you're gonna see where it goes. But this is one of the types. And you could have also taken your profit at one of those lows. So you see a low here, a low, and a low. So it could have been this one too. But me personally, I took my profit at this low because this was the low hanging fruit. Going back to the 1 minute. So this is the first entry and I'll show you the second entry. So you see this one was also valid. It could go lower. Now, what is my entry? The entry that I took is this one. You see this fair value gap? And as I said, this is going to be my second fair value gap. Why? Because price is already reacting from the first fair value gap, which is the 15-minute one. Now we have the 1 minute. And what do we have here? An inducement or a high in a fair value gap. So if price took this, and then there is projection to the lower side, I would take this one. If we see, and if we pay attention to what's going to happen now, price taking the high, again, inside of the fair value gap. Any sign of reversal, there's nothing. So this is not a sign of reversal. Sign of reversal, there's nothing. And this is a candle that tells you that mostly the momentum to the upside is lost, and also but the momentum to the downside is maybe starting to happen. So at this point I said, okay, maybe it's coming soon. And then there was an engulfing candle that engulfed this candle low. I entered from here, and my stop loss, instead of putting it above this high, and you could do that, what I've done is put it above this high and then target what? This low hanging fruit right here. And this is a 7-1. That's a huge trade. And if we play the price action, you can see that price at this point started to go lower, no drawdown at all, and then hitting the take profit in, let's say, there you go. So in about from here to here, that's about 55 minutes, and then take profit hit, no drawdown at all. This is how we can align all time frames, starting from the weekly to the daily, and then 15 minutes and 1 minute. This is how we do it. It's not always about quantity, it's about quality. If you guys like this type of content, then make sure to hit the like button, subscribe to the channel, and leave me a comment with any video suggestion that you want me to make a video about. And that's all I want from you. This is Molham, and I'll see you in the next video.